All right, welcome to another video. Today we're going to take a look at Zoom, the stock, and we're going to go ahead and just give a quick chart evaluation on this stock. Now, keep in mind, none of these are recommendations to buy, sell, or trade any stocks, just my own personal thoughts and opinions. All right, so let's kick things off here. And as we do, we are going to go to the bottom here. You can take a look at this stock. Over the last 6 months, this stock is down about 45% or so. And as you look at it kind of year to date, we're down about 43%. So the stock had a little bit of a toppy action here, and then it kind of pulled back over the last month, down about 16%. So really about 50%. You're kind of retracing to about 50%. So as we kind of go ahead and check things out, what you want to do is go in, pop in Zoom. Actually, let's pop in the market. You can see the overall market right here. We are down big time. So if you look at the S&P right now, we are down quite heavily, almost about 85 points or so. So we're selling off pretty big, but what you'll see is Zoom has already been selling off for quite a while, right? We hit kind of almost 600, not quite. Let's see what is the high here, 588. So we hit these higher levels, just about 600, and the stock's been going down since then. And when you start looking at where are we right now, we're kind of down in this 175, 185 levels where we're picking up some support, and that's previously around the 2020 level. So it's quite possible that this stock will get at least a short-term temporary bounce right now with some of the fear going on in the price action. But it really comes down to, are you a short-term investor, longer-term investor? Do you think the stock has some staying power over the next 5 years? Or is it more like a trade for the virus-related trade? So that's really the big question. So from a longer-term perspective, you can see the stock is fairly new, right? It's not one of those that's paying out a dividend or looking to pay out a dividend very quickly. So you do have some support that you're coming into, but if you look at also the volume, yes, the up volume and the price action was good when we had the breakout, right? From a longer term perspective. And now the pullback actually is normal, it's healthy. Because the stock got stretched and extended. From a Fibonacci level, we're already past that 61.8% retracement because that stock just exploded so quickly. So when you look at it that way, it's pulling back more than it really should. But if you're looking to value buy, you're coming right into some support here, right into some support here, and you're already getting it from about a 50% retracement over there. Again, longer term. If you're looking at it from kind of a medium term perspective, you are starting to get some bouncings here and are a little bit of a rounding. Yes, the downside volume is still a bit stronger than the up volume. But think about it, this stock is doing well in a down market, right? So it's holding up fairly well. The question is are people piling into this because they're going to go more into Zoom and more people are going to go into Zoom? If that's the case, then, this could be a worrisome problem for the stock. But if this stock is still going to continue even after the fear of the overall market, then that could be a good thing. So from a daily perspective, you could see we had a nice little, here's a descending trend line, kind of from a shorter term. Stock is starting to break out, volume is starting to pick up, and now even today on a big down market, people are still buying into this stock. So this is a good thing. From the chart perspective. So that's kind of what I look at is, if you're interested in getting this stock, again, it'd be more for medium term to longer term, because right now, shorter term, you're getting a lot of whipsaw action. So you have to be careful. So you might start nibbling. Let's say you're trying to get into 100 shares. You could say, hey, let me get in like 10 right now. And if it keeps going or if it pulls back, you're kind of using this price level right here, right around 180 to 175, you pick kind of the area. You could give it even to 170 as kind of your key support levels or certain stop areas. So that's the range that I would kind of give it, because if it breaks below this could be a problem. It's kind of the same thing that Best Buy here is doing. It's kind of was holding right here at this level for a little while, and then if it rolls over, that's a problem, right? But we didn't see any big upward spikes on Best Buy here like we are with Zoom, and this one came off the highs very quickly. So it's a little bit different. So when you look at Zoom here, it's been going down for a while, so it's been able to digest that move. The question is are we just coming back up right here and then are we going to keep rolling over? So again, nobody knows. You're just kind of looking at it from that trend or perspective, and depending on the length of the investment you're looking to have. So from a chart perspective, you know, you are down right around there, that 45, 46%. Let's see here, in this case, 66 from where we're at, from the highs. Okay, so from the overall highs, we are down about 65. If you're looking at it from a 6 months, you know, you're down 45. So it seems to be a fairly good value buying opportunity, but the question is are you looking to hold it for that long? So anyways, those are kind of my thoughts and insights on it, and truly appreciate you joining me, and I hope you enjoyed kind of this video and analysis. Anyways, thank you so much. Feel free to subscribe to the channel if you're brand new, and I will see you in another episode.